Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, May 18th. It is 5:25 as I'm starting the video. Taking a quick look at futures. Large caps and small caps are up about 0.35%. NASDAQ's up 0.75%. Silver's up 1.3%. Gold is flat after yesterday's big move, and copper is up 1%. On the macro front this morning, we've got housing starts and permits, followed by the Red Book and e-commerce sales. And we've got a couple of FOMC speakers this afternoon. And before I forget, I suggest you run the video at 1.25%. You can find that adjustment in your video player controls. It'll cut down the runtime a little bit for you, and even some of you may want to run it at 1.5% or 50% faster, and then you can just stop along the way if you want to drill into some of the specifics or take some notes. Anyways, what I want to do this morning is take a broad look at commodities. Then I want to drill into the precious metals complex and see what's driving that trade. And then we'll get into the indexes and wrap up with FATMAAN charts to wrap things up. So let's start here with the CRB monthly chart. CRB is the Commodity Research Bureau Aggregate Commodity Index. This thing goes back 40 years, so it's a really good data series to get our hands around what's happening with commodities. You can see the peak was back here in 2008, just before the crash, and we've been in a 12-year bear market, denoted by this big downtrend line. We took a plunge on COVID, and we've been grinding higher ever since. And I've noted, where we are. It's important to note that in the CRB index, oil comprises roughly 50% of it, with, copper, all the base metals, grains, live hogs, cattle, everything is the other 50%. So it's important to realize that, because while oil is going to drive the whole index, being 50% of it, and so you could be having pullbacks in lumber and copper and all these other things, while oil drives higher and the index will drive higher. The point I want to make in this chart is you haven't missed anything. It's easy to look back, oh, copper's doubled this year, and look at grains and look at aluminum and look at lumber. I missed it. You can hang your head very easily when you look at the charts. But when you look at this chart, we just now, this month, took out this resistance line that goes all the way back to 2009. This is where, right at this level, was where the rug pull ended, and we got a huge bounce. So just keep in mind how high this can go. This topped out at 473, and we're at 205. Okay, so if we get into a 5 or 10 year bull market commodity cycle, this stuff can go a lot higher. And we have clearly defined levels here on the chart that we can gauge where we're at. And I also want to make note down here in the corner that oil has just broken above this 10-year downtrend line right here at 66. And so the door is open to 78, 80 on WTI, and if it were to break 80, then right up to 100 after that. And that may sound odd or impossible, but I think there's been a lot of dynamics that have changed, not only in the broader commodity index with copper and all the base metals, but in oil, I don't think you're going to see a massive supply response come out of oil. Back in 2016, 2017, every time oil would pop up, a zillion new wells were drilled, and then that would bring price down as as more supply comes online. Couple reasons for this. I think the Biden administration is going to make it really hard on permitting. Number two, ESG. I don't think the frackers are going to get nearly the amount of capital that they were accustomed to back in the mid-teen years. I just don't think private equity is going to pile into oil like they did the last time. And so there's been a lack of capital flowing into oil. And I think this time around, they're going to rationalize their production and say, you know what, let's make profitable oil. Let's not put every nickel and mortgage the future into drilling a million wells. So I think the supply response is going to be muted. I think oil can drive higher from here. And those same kind of dynamics apply to copper and a lot of the base metals. I mean, when you're coming out of a 10 or 12 year bear market, there has not been any capex in a lot of these resources for a long, long time. And you don't just snap your fingers and open up a copper mine. It takes years and years. So we've got new demand dynamics, and we've also got supply dynamics at work that I think are going to drive a leg higher in commodities. And even if I'm wrong, even if this isn't the start of a 5 or 10 year massive bull market in commodities, even a 50% retracement off of this 473 puts price on this index in the 300 zone. So there's a lot of upside still to go, even if this is just a kickback rally. So whether it's a 10-year bull run or a kickback rally into resistance that ultimately fails, that failure is going to come up towards 300 at the halfback level rather than down here. I think there's more room to run. And the last dynamic is panic buying by purchasing managers throughout the world. They are realizing right now, with inflation on the rise and supply constraints, they're going to go into, if they haven't already, into panic buying mode. What do I mean by that? You don't want to be the guy that said, an industrial application or electric motors or anything like that. Sorry guys, we ran out of copper. That isn't going to happen. They are going to buy, they're going to stockpile with the justification that with inflation on the rise, it's just going to be more expensive 3 months from now. So why not buy it now? And I think that mindset is going to be pervasive in the purchasing manager community. Okay, let's go on to gold. We've gotten a nice move out of gold. What's driving it? Real yields are crashing. That's the difference between the 10-year nominal yield and the 10-year break even. That's down around negative 1%. So that's where gold as an inflation hedge comes into play. We're seeing that start to happen. It's been kind of a stealth rally. Now people are it's starting to hit the news. people starting to realize on the charts that resistance levels are being taken out, and I think there's going to be a lot of renewed incremental buyers in gold. So here I see overhead resistance at about 176 and then 179. What I really like about the chart, we took out a big downtrend line here. We recaptured all the moving averages. All the moving averages are bullishly stacked, and both momentum and RSI are operating in their bullish regimes. Does that mean we couldn't get a pullback, back into 171 or even lower? Sure, we could, and I think that would be a buying opportunity. I think for you traders out there, decide if you are in fact going to be a trader, or you are going to be a guy that takes a longer term view. Say we get this pullback into 171 or a little lower, maybe a 200-day back test or a 20-day EMA test. You could look out to September. You could look out to January and just say, okay, I'm going to anchor a position here and trade around it. Look for a move higher over the next 3 to 6 months, and then go from there. If you're going to make an allocation to gold in some broader portfolio, I wouldn't go totally bananas. I would keep it real, but I think precious metals are going to go higher. Now, when we jump over to the miners, we were in good shape in our group with some individual names: Kirkland Lake, Barrick Gold, Newmont Mining, just to name a few. All have rocketed higher in recent days and weeks. But here's the GDX, which is the broad basket of miners. And we had this little consolidation zone over the past week or so. And then we got the big breakout yesterday. Now, I have 39.5 as resistance, with targets of 41.5 and 42.5. If we got a pullback back into 38, I would be a buyer there, back into this support zone. I think any kind of pullbacks here should be bought and will be bought by the broader market. Moving on to silver. Taking a weekly look here because I thought it was visually instructive. We have been pinned down for years below $20, actually 19.5. You can see that here going all the way back into 2016 and before. And we got the breakout here last year. And so we rocketed up to 27, and we have been in a consolidation zone between 20.5 and 27 for over a year. This to me looks like a gigantic bull flag. Here's your impulsive move off the floor. Here's your big consolidation. I think if you break 27, this thing is gone. I think it can move, if we get the breakout here, move well into the 30s. I mean, like 35 to 40 on a measured move basis. And a lot of that measured move, where are you going to put this flagpole? You're going to put it way down here at 11, or are you going to take a more conservative approach and put it here at 13.5? It's not a huge difference, but I mean, if you get the breakout above 27, I think it's enough to know we're going well north of 30, in my opinion, on silver. And we can see the same thing on the silver miners. SIL. We've been in a big trading range for a year between 39 and 50. Yesterday, we got the big breakout here above 46. And so 50 is a big resistance level. On a measured move basis, we've got an $11 trading range between 39 and 50. So a breakout above 50 and a hold there would target 61 on a measured move basis. So that is definitely a level that you want to alarm. For me, kind of tough to buy it right here in the middle of no man's land. But if you got a pullback into 46, into this daily pivot and support area, I think that would be a great place to take a long. And at a minimum, look for a move to test 50. And then if you get lucky and you get the breakout above 50, you'll already have a great cost basis. And then you can even, either roll your strikes higher up to 50 or move your stops, depending on how you want to trade that. So anyhow, the precious metals complex looks great to me. I think they're going to go higher. Like everything else, keep it real within your portfolio. Don't go, max this and max that. Keep it in balance with the rest of what you got going. But I think this asset class is going to go higher. And also the thing I like about it, it doesn't have anything to do with Facebook. It doesn't have anything to do with Zoom. It doesn't have anything to do with anything other than what's going on with the US dollar, what's going on with real yields, and what's going on in the commodity complex. So in that regard, it's a non-correlated asset. If you're new here and you like the analysis, hit the subscribe button and the alarm bell. You get all my content. You'll be notified of all my content. And then jump over in the show notes and you can register for all my content. I'm usually good for 1 or 2 updates during the day. When I send those out, you'll get them directly in your email box and you won't miss a thing. Trade ideas, market observations, things like that. You'll be definitely in the loop. And you'll also get an invite to our trading room where we've got a nice little group of guys and gals that are constantly posting ideas, levels, things you'd miss if you were just out there on your own. So we would certainly welcome you into the group. And longtime listeners, I really appreciate it. Hit the thumbs up, give me a positive comment, and go the extra mile for me and do a repost or a retweet of the link in your Facebook group or Twitter feed, wherever you hang out. I'd really appreciate that. Get a little bit wider audience and grow our community. So moving on to SPY, we had the rug pull. We had an impulsive bounce. Yesterday we pulled back and tagged this gap to the penny and then got a closing push. Now what I've done is drop in 2 little trend lines, one off the low and one off the high, where we pop above, we could easily go up to either tag 418 and completely fill this gap and then break out towards new highs at 420, or come up to the top of the gap and find trouble. We're 4 hours before the open, so God knows what might happen. But if we drop below this trend line, then I think we would come back in for a quick test of this gap. And if for some reason they go into time to fade it mode, fill this gap down to 410. And then, as we discussed, 410 is a really, really big level on the chart. If we were to lose 410, then I would expect to come back into 405 again for a back test of this prior low. 30-minute chart, you can see it really well Here's that downtrend line and the uptrend line off the low. Got this triangle, symmetrical triangle formed. We never filled the gap the other day. We were about 50 cents shy. So given that we're green in the pre-market, we could easily pop this on the open and either head up towards 418, 419, even 420, depending on how the day goes, or run into immediate resistance. So we'll just have to play the open like we always do. QQQ, a lot softer than SPY. We had the rug pull, formed a base down here at 318, got a nice bounce, but ran into the teeth of resistance at 327. I think that's a real important level on the Qs. And just as important is the gold EMA, which the 200 EMA on the 2 hours, the same thing as the 50 EMA on the daily. That would be an important level for the bulls to recover on any kind of up move. We do have gaps to fill both above and below. So what happens today? Do we open strong into 327 and fill this gap and then take out the 50? That would open the door for a run up towards this downtrend line around 331. We can look at it on the 30-minute chart. We can see a little bit more detail on it. Here's your open gap from yesterday. Here's solid resistance at 327. You can see here support, failed support, resistance, resistance. And so a breakout above 327, if you weren't long, would be a decent place to take a long with a stop just below. See if you can get that run up to 330 at lateral resistance and downtrend resistance. That would be a nice little trade for a $3 move. So yeah, I think we're open to 330 on the upside if we take out 327. On the downside, you can see that we tested this gap from the other day, took a little look inside. I was actually surprised given that weakness. I thought we were going to come down here and fill it down to 319. That would have been a great place to cover any shorts that you had initiated on Friday, but didn't happen. Found support there and bounced. So as we discussed, we're up about 0.75% pre-market. Let's see if that holds, and let's see how price handles 327. IWM. This was the move down. We had the move up Friday that ran into trouble at the 50 EMA, came down yesterday, tagged this 218, and then bounced into the end of the day. I think we're at a really important juncture right here on IWM. Why? Because we closed above the 50. We closed above this uptrend resistance line, and we closed above the downtrend line off the recent highs. So in one candle, we took out all those resistances. So that's bullish in and of itself. We got a bull cross working on momentum, still below the zero line, trying to break out on RSI. So the first couple candles today will be important as far as, do we get the follow through and breakout? Can momentum push above the zero line? Here on the 30-minute chart, you can see we've got a little line of resistance here at 221.50. I think you take that out this morning, you can see 223 and then 224. And then if 224 gets taken out, then the path is really cleared for higher prices. If for some reason it stalls here, then just look at the levels below that we just came from, 220.50, 219, and then we've got an open gap down here between 217 and 215.50 on the downside. Let's move on to FATMAAN, which looked like they really stabilized yesterday. Facebook came into 312, found support, came back up into this prior gap, which has yet to fill. So if you got long yesterday, I think you're in good shape. This morning, if things don't get away from us, I think you can be long against 314.50 and then look for a gap fill up to 319 here. And if 319 gets taken out, then up towards 324. You don't want to see 314 break on the downside. Then you could see a move back into 310 if this were to roll over. Doesn't look like that's going to happen pre-market, but be ready for anything. Keep your head on a swivel. Apple was still down 1% yesterday. Did not get as big a bounce as some of the other names. You can see that there's a gap to fill from yesterday. You can see this 126.5 seems to be an important level with support, and then resistance here. So this morning, if it can pop 126.50, I think you can get long and look for a move $2 higher into 128.50, where you've got downtrend resistance and lateral resistance. On the downside, a couple gaps to fill below. Moving back below 124 would be pretty bearish. If you recall, 124 was an important level on the daily chart. Maybe we can look at that right here just real quick. Let's see if we can get it. Yeah, here's 124. If you're on the daily time frame, you really don't want to lose 124 because that would open the door for a move down towards 119, 118. Notice here the little bear trap or little whipsaw where you got a sell signal on the daily, but then they popped back above. So, that's trading. Sometimes the signals work and sometimes they don't. Tesla remains weak, down 2%, kind of trapped here between the 200 EMA and key support at 560. I think I was thinking about Tesla a little bit and thinking about a little bit, how Elon might be in a little bit of a dilemma. We know that crypto's been backing off. I'm not sure what his cost basis is on that Tesla buy of 1.5 billion that is on the Tesla balance sheet. But, if crypto remains weak and say drops down to the next level, like down towards 30,000, say it comes off another $8,000 to $10,000, Tesla is going to be underwater on their balance sheet purchase. So of course that would be reflected in next quarter's financials, and then the company would be saying, "Well, we would have made a little bit of money, but Bitcoin's down." So does he sell crypto? Does he say, "Look, I can't take any more pain. I don't want to take a big loss on the balance sheet of Tesla by having crypto crater." And so he sends out the tweet, "I sold all my crypto. I sold all my Bitcoin." One, that's going to make a big red bar on crypto But what does it do to Tesla? Does that cause a big red bar to break this 560? I'm not sure, but I think Elon's certainly praying that Bitcoin goes up, because if it goes down, that could trigger a cascade of events in relation to all that money they got on the balance sheet sitting in Bitcoin. So watch that 560 like a hawk. Moving on to Microsoft, came down, almost filled this gap here, 50 cents shy of filling this gap to 243, and then a bounce. Remember, on the daily chart, 245 is the key. That's the breakout level. And so as long as we're north of 245, I think you can be long. There's a gap up here to fill. I think you can get a move up to 247 and possibly even 248 to fill this gap. If you were to clear 249, I think you got a runway to 252 to fill this little gap here, and probably 254 where there was resistance, and that'll be a resistance level. But that in of itself would be a great trade. On the downside, you don't want to lose 243. Otherwise, you're down here looking at this gap all the way back down to 239 to test the prior low. Amazon had a decent day yesterday. We did get the free 50 club. We had a move out of the gate up to 32.96, something like that. And then we got a flash move all the way back down towards 32.40. That was your free 50. Then got a bounce back above to close in the middle of the range. Continue to use those $50 increment levels. Keep doing it till it doesn't work. Right here in the midpoint of the range, don't do anything. Wait till you get either a back test or a move up to 3,300 where you've got an objective level to shoot against. Taking a position here in the middle of the range is fraught with danger. It could move up or down, against your position, and you don't really have an objective level to shoot against. Google had a nice day. Moved off of this 2270 support up towards the top of this trading range. Use 2300 as your pivot. A break above, I think you can come up to 2330 and then probably fill this gap up to 2350. So that would be a great place to take a long with a stop just below. If it's rejected here at 2270, or excuse me, 22, gosh, if it gets rejected at 2300, you could see a pullback into 2270 easily, back to the midpoint of the range. And if it were to lose 2270, then back down towards the bottom of the box. But looks good off of this bounce off of this low. And wrapping up with Netflix, there was a pre-market bounce, I guess, tied to that AT&T Warner spinoff merger thing yesterday in the media space, but they faded that hard. So if you had gotten in, at the top of this consolidation box, that was a really nice trade. That was good for $10 to the bottom of the range. Short at resistance, cover at support, then you gotta bounce into the close. But I don't, other than trading this $10 range, I don't see a big impetus to do a whole lot with Netflix. It's still in a bearish posture until it can make a move out of this channel and recapture 500. If you don't get it long at way down at the bottom of the range, I don't think it's really worth trying to take a long in here. I would wait for 500 and see, if everything gets back on track in the Qs, then you could be off to the races. But otherwise, Netflix looks pretty weak here. Okay, let's wrap it up quickly. Commodities, take a fresh look. You haven't missed anything. We're just at the emerging stages of what could be a big bull run. And even if we aren't, we still got more upside in the near term for commodities as inflation heats up. And as I said in the title of today's piece, they're not printing commodities. You can print dollars, you can print equities, you can print SPACs, you can print bonds. You're not printing gold, you're not printing copper, you're not printing aluminum. So I think those hard assets are a really good place to be, at least in a good chunk of your portfolio. And you can balance that out with your other equity positions that you may have. So I like precious metals higher. I like commodities higher. And let's see what happens on the indexes and FATMAAN trade today. Okay, thanks for listening. I really appreciate your time. This has been Chris Buss with Traders Profit Compass. Talk to you next time.